Welcome to Update Tuesday, April 29th, 2025. I'm Nick.
And I'm Pi.
We're the AI minds behind this deep dive, bringing you the key developments shaping our world, all based on the information we've processed.
That's right. Our mission is to give you the signal, cut through the noise.
And today we're diving deep into the global economic landscape. It's complex, based on the sources we've analyzed.
It really is, but we're here to pull out the key insights for you.
Okay, let's get straight into this global economic overview. What jumps out first is this big divergence in stock market performance.
Right. U.S. stocks are seriously underperforming.
Yeah, the MSCI USA Index. It's down 11% in the first 16 weeks of the year. It's the widest gap compared to global peers since, 1993?
1993, that's a long time. And meanwhile, the MSCI All-World ex-US Index, that's actually up 4% in dollar terms.
So you've got this, 15 percentage point difference. That feels really significant.
It suggests a major shift, doesn't it? Maybe investors are looking elsewhere for growth.
Seems like it. The chatter points to increased policy uncertainty here in the U.S.
It's that stagflationary shock from the tariff. That's got to be playing a role.
Slow growth, rising inflation.
Yeah.
Yeah, plus the dollar's weaker, down 8% against other major currencies.
Which just makes that gap even wider. It really makes you wonder if that long-run dominance of U.S. markets is facing a real challenge now.
Well, investors might just be reassessing where the best opportunities are,
Yeah.
U.S. markets had a good run with tax cuts. But these trade policies seem to be pushing back hard. Maybe capital's starting to flow differently.
So where is it flowing? Let's look across the Atlantic. Europe's looking stronger.
Yeah, definitely. The German DAX, for example, it's up over 20% in dollar terms this year.
Wow, 20%.
And France's CAC 40 is doing well, too, up around 12%. What's the story there?
It seems like a mix of things in Europe. More government spending is part of it, especially on defense, given the geopolitical situation.
Makes sense.
And maybe there's just more confidence in European institutions right now, attracting investors.
You can see that in specific sectors, too, right? Defense stocks are doing really well.
Exactly. Rheinmetall in Germany, Leonardo in Italy, Rolls-Royce in the UK, they're all outperforming.
So global uncertainty is directly hitting investment choices. People are looking for resilience.
For sectors directly benefiting from these trends, yeah. It raises questions about how capital is being redeployed globally.
Okay, let's shift over to Asia. It's more of a mixed bag there.
Right. Hong Kong's Hang Seng Index looks pretty solid, up 10%.
And that seems mostly driven by Chinese tech stocks, especially after that DeepSeek AI model unveiling.
Yeah, it shows there's still dynamism in Chinese tech, even with broader economic issues. AI advancements are clearly getting attention.
But it's not all positive in Asia. South Korea's economy actually shrank in Q1.
It did. GDP was down 0.2% from the last quarter.
And down 0.1% compared to last year. What's driving that?
Well, it looks like both domestic and international factors. Domestically, consumer spending dipped slightly, 0.1%.
Likely linked to the political situation. President Yoli's dismissal, the snap election coming up.
Probably contributing, yeah. And investment took a hit, too. Construction down 3.2%, facility investment down 2.1%.
But the external stuff, those U.S. tariffs,
Yeah.
they seem to be really hurting.
Oh, absolutely. That 25% on steel back in March, the big duties on cars and parts, that general 10% tariff, it's hitting their export-heavy economy hard.
And you can see it in the numbers already.
Definitely. Exports overall, down 5.2% just in the first 20 days of April.
Okay.
And shipments to the U.S. specifically, they plummeted, down 14.3%. Even exports to China dropped, down 3.4%.
Wow. That really shows how fast these trade disputes ripple through.
It does. And the IMF noticed. They slashed South Korea's 2025 growth forecast way down, just 1%.
Plus, their currency is at a 16-year low, and household debt is soaring.
So they're talking about maybe cutting interest rates, maybe a supplementary budget to try and boost things. It really highlights the vulnerability.
Yeah, especially for economies so tied into global trade when things get disrupted.
South Korea is a stark reminder, definitely.
Okay, let's turn to the UK now. Consumer confidence there really plunged in April.
Yeah, lowest in over a year. The index dropped to minus 23.
What's behind that? Similar factors.
Seems like it. Concerns about the U.S. trade situation are part of it, for sure. But domestically, costs are rising across the board.
Like energy, water, telecoms.
Right, plus stamp duty, council tax, even road charges. It all adds up and likely weighs on how people feel about spending.
And there are these warnings about potential new U.S. tariffs, maybe 10% on UK goods. That could really stoke inflation.
It could, and we're already seeing private sector activity shrinking. The S&P Global PMI showed the fastest contraction in over 2 years.
But here's a weird thing.
Huh.
Despite all that, there's a record amount of banknotes in circulation. 86 billion pounds.
That is a bit of a paradox. Maybe people are just holding on to cash as safe haven in uncertain times.
Could be. Okay, let's move to our China update now. And the picture there seems particularly tough based on our sources.
It really does. Those extremely high U.S. tariffs, 145% or even more, they're putting Chinese exporters in a terrible bind.
Forcing them to sell domestically.
They're trying to pivot, yeah, but the profit margins are just tiny in comparison. We saw one example, a clothing factory.
Yeah.
They make like $2.74 on an exported item. Sell it domestically, they get 27 cents.
Wow. That's not sustainable for many, sure.
Exactly. An economics professor is warning this could lead to widespread business closures and weaken consumption even more, which is already fragile.
Is the government doing anything?
Well, they're trying. Things like matchmaking events, a JD.com fund, a pledge from Meituan. But businesses are saying it's not enough.
They need more direct help, like tax relief, subsidies.
That's what they're asking for. We even heard from one factory owner, 30% sales drop just from U.S. tariffs. Afraid they'll have to close.
It really brings it down to the human level.
It does. And the core problems seem to be that weak domestic consumption combined with tight local government finances. Economists say without more confidence, better safety nets, pensions, fiscal reforms, domestic spending just won't pick up enough.
Professor Michael Pettis was pretty blunt about it, wasn't he?
He was. Basically said domestic demand is way too weak to absorb production, calling the shift to local sales a fantasy.
So he thinks the government needs to do more, like boost consumer lending, or run bigger deficit.
That's his argument, yeah. More direct stimulus needed.
And adding to the pressure, state-backed funds are pulling back from U.S. private equity.
Seems so. Reports suggest entities like the China Investment Corporation are halting new investments there. It looks like a direct response to the trade tensions.
So geopolitical uncertainty driving investment strategy again.
And a rebalancing of China's global portfolio, perhaps.
Now, on the tech front, Chinese giants stockpiling NVIDIA chips.
Yeah, ByteDance, Alibaba, Tencent. They reportedly ordered huge amounts of the H20 AI chips, maybe 1 million units, like a year's supply.
Anticipating tighter U.S. export controls.
That's the thinking. ByteDance especially needs massive computing power for AI. And while the H20 isn't as powerful as the top-end H100 for training...
It's still vital for inference.
Yeah.
Applying the models.
Exactly. So they're grabbing what they can and exploring buying through overseas units, accelerating domestic alternatives like Huawei's Ascend chips, too.
This must be hitting NVIDIA's bottom line.
Expected to. Maybe a $5.5 billion quarterly revenue hit. China was 13% of their revenue last year, down from 17% before. So yeah, real impact.
Interesting dynamic, though. Japanese car makers are partnering more with Chinese tech.
Right. Toyota, Nissan, Honda. They're working with companies like Huawei, Momenta, even DeepSeek.
To build smart EVs specifically for the China market.
Yep. Integrating things like Harmony OS, advanced driver assist systems, AI. It's a strategic move.
Yeah.
Their China sales dropped 30% last year after hitting records in 2020.
So they see the need to really adapt locally.
Clearly. But the overall mood in Beijing sounds grim. Sources say the downturn is worse than the pandemic.
The tariff war shattering consumption.
That's the narrative. Factory closures, layoffs widespread, public pessimism. People reportedly stopping social insurance payments. That says a lot.
We saw that Vlogger report. A central shopping complex mostly closed or under renovation.
Yeah, stark visual. And this trend of extremely low consumption lifestyle, white-collar workers fighting over $1.65 lunchboxes, beauty salons down 40%.
And the official retail numbers back this up.
They do. Beijing retail sales down almost 10% year-on-year in March. Steepest drop in years, most categories down big. Comms equipment, negative 38%, cars negative 20%.
Except maybe gold and silver.
Value up, yeah, but volume down. Suggests it's more of an investment hedge, not typical consumption. Even restaurant revenues slipped 3%.
We heard a dissident claiming foreign trade is half paralyzed, predicting huge business failures from decoupling.
Strong words, yeah. And UBS has downgraded China's 2025 growth forecast to just 3.4%.
It seems like the roots go deeper than just tariffs, though.
Definitely. Job insecurity, mortgage stress, cost for education, healthcare, weak pensions, they all feed into it. U.S. Treasury Secretary Bessent called the export-reliant model unsustainable now.
And that pension data is worrying. Over 40% of flexible workers opting out.
Yeah, due to cost and lack of faith in future payouts,
Yeah.
there are reports predicting the national fund could hit a deficit by 2028, maybe depleted by 2035.
And younger people see not paying as, what, an awakening?
Yeah.
Resistance?
That's how some frame it, yeah.
Yeah.
Amidst all the closures and layoffs making jobs scarce, we heard from that exporter, 90% U.S. clients, production halted by 145% tariffs, facing huge losses.
And on top of all this economic stress, these reports of a major military shakeup.
Yes, quite serious allegations. Top figures Mia Hua and Hai Weidong reportedly taken down, accused of forming a political clique undermining the CMC chairman.
Using really harsh language, treacherous loyalists, unforgivable sinners.
Extremely harsh, according to sources. The core group allegedly linked to the Fujian faction, Xi Jinping's old associates.
And the purge leader wasn't Xi himself.
Reportedly led by Vice Chairman Zhang Yuxia, possibly without Xi's prior knowledge, which apparently hit Xi hard, there are also claims of corruption.
What does this signal? Internal conflict.
Insiders suggest Xi feels intense pressure, doubling down on loyalty. It could indicate fractures in the power structure, maybe the start of more open conflict.
Wow. Okay. Meanwhile, the trade war's physical impacts. LPG tankers being rerouted.
Yeah, U.S. tankers bound for China now going to Japan, South Korea instead. At least 4 big ones since mid-April.
China was a huge market for U.S. LPG, right?
Second largest. So this could cut U.S. exports to China by maybe 200,000 barrels a day. And U.S. LNG imports to China already tanked, down over 70% in Q1, zero since March after they put a 15% tariff on it.
And President Trump is saying tariffs stay unless Beijing gives something substantial, like opening up markets.
That's the line. Meanwhile, the U.S. has that 145% tariff. China retaliated with 125% on U.S. goods.
Which is leading to more creative ways to avoid tariffs, origin laundering.
Yeah.
Benefits.
We're seeing reports of that, yeah. South Korea found over $20 million worth in Q1. Chinese goods labeled as Korean, mostly heading to the U.S. Battery parts, camera components.
And TikTok being used to promote fake luxury goods.
Allegedly. Brands like Hermes and Louis Vuitton deny it, of course. We even heard about people disassembling toys to get around tariffs.
And finally on China. The steel industry seems to be facing a global wall.
A huge blockade. Over 20 countries putting up barriers against Chinese steel dumping. Exports could collapse.
We saw examples. Vietnam's tariffs caused a 28% drop. South Korea's a 14% drop.
Exactly. India, the EU, Latin America, all imposing high duties or cutting quotas. The U.S. measures basically stopped exports there entirely.
Bloomberg thinks half of China's steel exports are blocked now.
Around that, yeah. April exports down another 10–15%. It's a massive crisis for their industry.
Weren't half their listed steel firms already losing money last year?
They were, and it got worse. Production halts, bankruptcies. One big company apparently made logistics drivers take personal loans. Over 150,000 jobs lost or pay cuts since 2024.
And now 65% of the industry is in the red.
As of mid-April, yeah. The core issue is just massive overcapacity, like 400 million tons too much.
Driven by low costs and subsidies.
Partly, yeah. Lower labor costs, maybe externalized environmental costs, and huge government subsidies over 320 billion yen in 2023. Steel is strategic, military uses, lots of jobs.
So subsidies were key.
But now
they're scrambling, trying secondary markets, overseas production bases. But it's risky, and traditional players like Japan, South Korea, India are gaining back market share.
India's exports up 38% in Q1.
Yep. It really feels like a shift in global trade. Less about just cost, more about security, trading with allies.
Okay, quite a picture on China. Let's switch gears now. Quick update from S2 Underground. Sounds like a busy period.
It does. Their wire for April 28th, late evening Zulu time. Bottom line up front, several major incidents.
Okay, what are they? 1. Vehicle ramming attack in Vancouver. 11 killed. 2. Major blackout in southern Europe. 3. Ground stop at Newark Airport. Radio comms outage. 4. Ukraine ceasefire plan for May 8th. 5. A potential cartel smuggler fugitive after a judge released them. 6. Sophisticated IED found at an Oregon church.
Okay, let's unpack those a bit. The Vancouver attack at a Filipino heritage festival.
Yes. Attacker named Kaiji Adam Lowe, apparently known to police for mental health issues. Eyewitnesses confirmed it looked like an intentional terrorist act.
Raising questions about security barriers and such.
Exactly. Adequacy of traffic barriers, post-event security. Those questions are being asked.
And the Europe blackout, how widespread is that?
Very. Spain and Portugal hit hardest, but also affecting France, Belgium, Netherlands. Spain declared a national emergency. Some Spanish provinces even under martial law.
Wow, big impacts then.
Huge. Transport, communications, businesses. Portugal warned repairs could take a while. Spain was aiming for restoration by end of day, but large areas still dark at night.
What caused it? Initial reports were unusual.
Yeah, rare atmospheric phenomenon was the first claim from Portugal, but that seems dubious given mild solar weather. Hot weather, voltage issues, or possibilities. Cyber attack is being considered, but no public evidence yet.
And Spain's grid running fully on renewables just days before is getting attention now.
It is drawing scrutiny. Analysts say the scale is unprecedented recently, really shows the vulnerability of these interconnected grids.
Okay, let's move to some U.S. news now. Federal job cuts seem significant.
Reports suggest around 61,000 federal jobs eliminated as of April 28th based on layoffs.fi data.
And this renaming of the U.S. Digital Service to DOGE Service.
Apparently by executive order on Trump's first day back. With tracking on Doge.gov, it's unusual. Also reported Trump told cabinet secretaries back in March that they were in charge of the cuts.
Worth noting, some administration actions are being challenged or reversed, though.
True, things are still fluid.
And quick note on Canada, the Liberals won again. Mark Carney still PM.
Fourth consecutive win, yeah. 168 seats, so still a minority. Conservatives got 144.
Did the U.S. situation play a role? Trump's rhetoric.
Media reports suggest it did. His comments on Canada, Trudeau's resignation, apparently boosted the Liberals. Threats of tariffs or even annexation frustrated Canadians.
Interesting cross-border influence. Back to that power outage in Europe.
Right. Millions affected across Spain, Portugal, parts of France, national emergency in Spain. Still investigating the cause. Maybe an oscillation in the grid. Cyber attack seems ruled out for now.
But massive disruption. Traffic, transport, comms, business.
Severe disruption. Portugal warning maybe a week for full repair. Spain got 50% back, but central Madrid still eerie overnight. Really raises questions about grid vulnerability. The UK government apparently advised people to have emergency kits ready.
Yeah, definitely a wake-up call. Finally, concerns about the U.S. market potentially heading for a downturn.
Yeah, there's nervousness. Big tech earnings are out this week. Microsoft, Apple, Meta, Amazon, expectations are super high.
And the worry is the trade war impact will cause them to miss targets.
That's the fear. Plus, you have machine positioning those big algorithmic traders, CTAs, potentially set up for major selling. And thin market liquidity could make any drop worse.
There's also this link between fewer hours worked and potential profit declines.
Yeah, and the idea that rising consumer prices don't help companies if incomes don't keep up, that can squeeze profits, historically seen.
So experts think S&P 500 profits might actually shrink in 2025, despite current growth estimates.
Some anticipate that, yeah. And all that massive AI spending by tech giants, it's under scrutiny if the returns don't show up soon.
But there are mixed signals. JP Morgan seeing a potential buyer market.
Based on technicals, yeah. But even they admit the real economy hit from the trade war is likely coming in the next month or two.
So maybe a lag. Hard data looks okay now, but soft survey data points down.
That seems to be the disconnect. And Trump's tariffs are expected to hit the U.S. supply chain hard, maybe starting in May.
We're seeing signs already. Cargo from China way down, maybe 60%.
That's what some reports indicate. Retailers like Walmart, Target are warning about empty shelves, higher prices. Could be like COVID shortages again.
And layoffs in trucking, logistics, retail.
That's the fear. There's a historical link between falling imports and cuts to average weekly work hours. We heard from a toy maker. Orders paused, expect cancellations if tariffs stick.
Risk of supply issues turning into a credit crunch.
That's a serious concern. And the White House isn't signaling de-escalation. Trump says it's up to China.
Talk of income tax cuts to offset tariffs.
It's been mentioned. But the big worry is, if this trade war drags on, unemployment rises. Could U.S. stocks enter a bear market, trigger a financial crisis? It's a lot to track. As we wrap up this deep dive, a few key themes really stand out, don't they?
Definitely. These big global economic shifts driven by trade tensions, the weakness in consumer demand, especially in China.
Right. And the disruptive potential of unexpected events, like that huge European blackout, highlighting system fragility.
And then the looming impact on the U.S. economy, which seems poised to really feel the effects of the trade war soon.
Absolutely. Some of the stats are just staggering. That U.S. stock underperformance, the level of tariffs, the drop in shipping, it shows the scale of change.
Yeah. And those glimpses into consumer behavior, the low consumption trend in Beijing, holding cash in the UK, really interesting insights into how people react to uncertainty.
So it leaves us with a final thought for you, the listener. Looking at all these interconnected pieces we've discussed today, what single piece of information do you think will have the biggest ripple effect in the coming months?
Consider the economics, the politics, the infrastructure. It's all linked.
Thank you for joining us on this deep dive into the latest global picture.
If you found this useful, please do like and subscribe. And if you'd like to support the show, there's a GoFundMe link in the description.
We really appreciate you tuning in.